Welcome to another Founder Wisdom Pod. We have Tesso Jivajirajah with us. Raja, should I say? He's a co-founder and CRO, Chief Risk Officer at Yonder. Cool application, sort of new stunning credit card fintech we're going to talk about today. This pod is presented to you by podpire.com. If you want to start or scale your own podcast, go to podpire.com. Tesso, I'm glad to have you on. Can you tell me a bit more about yourself and what you're up to nowadays?
Yeah, glad to be on, and thank you for inviting me. Yeah, a bit about myself. I mean, my background's always been in credit cards. I started my career in Australia at Commonwealth Bank. It's probably one of their biggest banks in Australia. So as you can tell, I am Australian. So I grew up in Australia. Um, Spent 10 years or better part of a decade in the bank across all types of credit card roles, including product risk and fraud, and then made the jump and moved to the UK. And this is where the seed around Yonder was kind of planted. Moved over here, had a mortgage credit card back in Australia, and was unable to get credit here completely. I had a decent income, applied for credit, and then found that no lender would lend to me, and the only lender that would lend to me required a guarantor. So I managed to get my girlfriend, who's now my wife, who's a British citizen, to be my guarantor, and they gave me a very measly £1,000 credit line. So that basically helped kickstart that kind of understanding of how expats feel when they move to another country, and the feeling of feeling invisible. So, one thing led to another. I met my two co-founders, including Tim, who's the CEO of Yonder, and Harry, who's the CTO at Yonder at ClearScore. And we found that the problem was actually a lot bigger than just ourselves. So we decided to start Yonder. And what we're doing now is we've produced a really beautiful credit card product that allows expats and those that are new to credit to be able to access a high quality credit card and access rewards that are actually very cool, usable, and kind of relevant for the people in our particular age group. So that's basically where we're at the moment.
Very cool. And with what bank did you partner up to have your own line of credit and support all your customers' credit?
Yeah, so we're not partnering with a bank. So we basically have access to a debt warehouse through some debt funding that we got privately, and that's our funding source for lending. We have our own consumer credit license, which we spent nine months actually getting from the FCA. So we are a regulated entity, and we're able to lend. So that's basically how we are operating at the moment. We don't actually partner with a bank.
And usually, how much credit do you offer to a new user? Does everyone start at £1,200 or is it more than that?
No, it actually varies. It varies based on risk, their affordability. So we measure their risk using a combination of credit file data, as well as some open banking information that we have access to when relevant. And then we also look at their affordability profile. So between the two, we make a decision as to how much to actually lend. Obviously, if someone's earning, you know, £25,000 per year, it's irresponsible for us to give them a £10,000 line. At the same time, if someone's earning £250,000 per year, it also makes no sense to offer them £1,000 line. So it is a unique calculation that we have on our side to work out exactly how much to actually offer.
Right, and you're in charge of that. I won't get in the technicals, but it's quite interesting. How many people use your cards right now, and how much credit do you actually loan, quote unquote?
So we're actually tipping around 10,000 customers, which you probably would have seen in some recent articles. In terms of credit, it actually varies between customer to customer. So we can go as low as £300, depending on their risk profile and the product that they choose, and can go up to £10,000 for a new consumer.
So if I do some mathematics here, 10,000 customers, and yeah, let's say 2,500 in average or something like that, maybe a bit more, means you're loaning out 25 million right now or 25 to 50 million.
Yeah, so I'd say that that's probably like our exposure. And what I mean by that is it's a credit card doesn't work like a loan. We don't just deploy the capital to that customer's account for them to use. What we do is we give them access to capital and then they spend when appropriate. So generally the consumers that use our products are the ones that use it for day-to-day spending. So instead of spending on their debit card, they use our card for their day-to-day spending and then clear that balance every week, every fortnight, every month depending on what tickles their fancy. And it's a great product for them to be able to just spend as per normal and get points and rewarded for it.
And how much do you make off the credit that you give them? I'm seeing purchase rate 30%. Like, is that the interest? Like, what's your cut of the pie here?
Yeah, so that's the interest rate that we charge. So it's 29.9% for the paid products, and it's 32.9% on the free proposition. However, for most customers that don't carry a balance from statement to statement, they actually never pay interest. So if you were to spend on the card month to month and always pay back in full, you don't actually pay interest. So it's a great proposition for them because they're spending money on the card, they're getting the points for the card and not paying interest on that particular borrowing.
29%, is that a bit high or is it the average? And tell us, is it like on all money that you give them in terms of credit? Give us a bit more details here.
Yeah, so the interest is actually calculated on the balance that they've got at the time. So, and it really depends on what they've rolled over. So, for example, if you've borrowed £1,000 throughout the month, and you paid £500 back, the interest is actually only charged on the £500 that gets carried over. And because interest is calculated daily, the quicker you pay it off, the faster, well, the lower the interest that you'll actually pay. Which, for most people, when they compare it to say, if I was to get a loan, I'll be able to get a 5% loan. That's all well and good, but the loan terms will tell you that you need to pay it over 12 months. If you were to pay it early, there's going to be a fee charged. So your overall cost of borrowing is probably worse on a loan than say on a credit card. You would have to do the math as to the term, the early repayment charge, and also the interest rate that you're getting on the loan. The way we view the interest on a credit card, it's more the case of the card itself allows people to transact, earn rewards. But when there is a need to actually borrow, it's a great flexible product to be able to borrow at a short term and to be able to pay that back. Now, a good example of this is myself and a couple of friends. I've got one particular friend, his wife and his wife's family, all their birthdays are around Christmas. So you can imagine that Christmas bill, you've got to buy Christmas presents for all of your family, your friends, birthday presents for your wife and your wife's family. So that's a lot of spending in that particular month. So what he does every year is he spends on that credit card and he pays it down over 2 months. So there is borrowing there, but because he's only borrowing for about a month or so, the cost of that borrowing is much cheaper than say if you had to go out to get a loan, if you had to go out and liquidate shares, things like that. So it's a very simple way to be able to borrow and borrow at short term.
Right, and let's talk about the rewards. Why not just give customers cash back?
Yeah, that's a really interesting question. It's what we found with user research is customers don't really care so much about cashback. It's one of those things where it's not actually cool. Fine, you get the 1% cashback, or you get the 0.5% cashback, but it doesn't create that emotional experience for them, and that's something that they actually don't really care about. Airlines have been taking over a lot when it comes to the points, and people love it. The concept of being able to catch a flight for free, or being able to go somewhere and only having to pay £40 or £30 is a concept that's very, very cool. So what we wanted to do was create a very similar concept, but do it for dining. Do it for things that people do on an everyday or weekly basis, monthly basis. No one flies all of the time. So the idea of being able to go out to a restaurant, spend on that card, and then just redeem it, and you know that the entire bill is covered. That is an amazing experience, and it's amazing, an emotional experience. And that's something that is just 10 times, 100 times better than, say, a cashback journey.
Yeah, and it's fun to sort of force them to spend on taking time and chilling in their own health. I guess there's gym classes, there's cool restaurants there. I mean, once I'm that the analytical mind in me is like, yeah, I need to spend $1,000 to get like one fitness class, but But I guess it must be a nice fitness class in London or something. And the
Yeah.
restaurants look quite amazing. So that's really cool. What do you have in terms of top goals for this year? Where do you want to take the company?
So we're looking to expand our experiences. So as you would have noticed, based on what you said, you know that we've got fitness, we've got some like not holiday, like hotel kind of destination stays and things like that, online stuff. When we first started, it was purely just dining. So the fact that we've expanded into those broader categories is part of our um, uh, kind of strategy to basically expand experiences in general and allow people to choose between different types of experiences. The other side of what we want to do is obviously we're London based. We want to expand outside of London. So part of this year's strategy is take the product and the experiences and expand both. So if we can expand the experiences to hit a wider net of things that people want to do and experiences that people want to do, and also then take the card to different cities, different parts of the UK, so that we can so other people around London can also experience the product.
The data of your customers, have you thought of packaging it up and selling it in some regard?
Not particularly. My ultimate view is we don't want to sell customer data. That's something that's I'm very fond of not doing, purely because our customers are our customers and they're very loyal to us. There are insights that we can generate from those customers in as an aggregate. So some of the things that we show, our partners, we can show our partners as our merchant partners how Yonder customers spend on their particular product as opposed to say a generic spend. So some of the things that we have seen are, a particular restaurant might get more spend if it's a Yonder customer that goes there, when that particular merchant isn't experienced at that time. So the average ticket size, compared to say when they're going when there's no rewards or they're not on that particular panel. So that's the type of data that we were looking at to try and encourage more partners to be on our network and also encourage our customers to use our product.
The restaurants and the partners that you choose, what's the dealio? Do you take 20% of what you refer them?
No, it's not something specific like that, and it kind of varies. I won't be able to go into the purely the contract side of things, but basically we have a merchant relationship with them, and then we curate those experiences. So those partners are basically on the panel and off the panel, and you know we have a partnership with them.
And same with Cover, which is on the insurance side of things.
Yeah.
Is it like a similar partnership? Like, have you specifically chosen them because they must be getting a whole bunch of customers because of you?
Yeah, I mean the cover side is actually a brilliant story. So we were looking for an insurance partner that was relatively more modern. So one of the great things about cover is obviously with the insurance side, if it's my card or whoever the consumer is, they have the product, they're able to take insurance for anywhere in the world for themselves and their entire family. Um, and the cool thing about this particular insurance product is, unlike other cards, you're able to actually take out a travel insurance document within the actual app. So if you were to go to a holiday, to say, if I was to come to Mexico for a particular date period, I can get a travel insurance document straight from Cover, and that sits within my app. Say something was to happen while I was overseas and I needed to make a claim, that claim can be managed within the app as well. And that is actually a very, very cool feature. And there's not many insurance providers that be able to do that. And we just loved their concept working with them. And as a team, they were just brilliant.
As a nomad that traveled over 30 to 50 countries in the past 7 years, I've never used international insurance. Is it just me? Is it me being weird? How should I use insurance in my life, knowing that I can solve pretty much everything in a matter of seconds?
Yeah, look, I think insurance is a tricky one because a lot of people don't value it until they actually have a problem. It's like all types of insurance. You take car insurance, you're never in a car accident, and you think, why did I take that car insurance out? It was such a waste of money paying that premium. The way I view this is you're paying for the card anyway, and you're getting that money back from your reward spend. So the insurance is essentially a free proposition for you, and it provides a lot of value. So an insurance fundamentally is peace of mind. So if you're traveling to 32, 50 countries, you know, if you could travel and know that, say anything was to happen, you've got peace of mind knowing that you got that Yonder card and that insurance to help cover you. That's just going to make your experience as you travel so much better. The flip side is obviously if you don't have insurance, something happens, you break a leg, you have to go into hospital, and all those medical bills have to be paid for. You're out of pocket, and you've got no one to kind of cover you and help you out. So for that reason alone, I think the insurance is actually a really great proposition.
Now, when it comes to personal finance, is it true that you need to make good money first before you start caring and strategizing about your money?
In terms of how you spend your money, just to clarify the question.
Yeah, in my case, I've never found it useful when I would make 30K a year at 18 to think about my money. I was broke.
Yeah.
Investing in real estate has never been smart for me. I preferred spending it on things and increasing my lifestyle, increasing my lifespan, and so forth. Having fun, enjoying life. So I thought that managing money only became useful when I had too much of it and when sitting in a bank account wasn't the best option. What do you have to say about that?
Yeah, I mean, like, I can't speak for how people can invest or should invest. I don't have the license to be able to offer that kind of advice. What I will say is one of the things that's important to me is, depending on how much money you actually earn and your affordability and your present uh, financial situation, it is an imperative and it's an important factor for me to make sure I consider all of that as I provide someone with a credit line. Because the last thing I want to do is give someone a credit card with a credit limit that means that based on their existing financial circumstances, they spiral out of control and they're unable to recover some of that debt that they've actually done, and unable to pay it back. So I think it's important for institutions such as Yonder and other institutions to make sure that we safeguard people based on their existing financial circumstances. And when we do issue credit or extend credit to them, we make sure that it's done responsibly and affordably.
What do you think of old-fashioned banks? Are they going in the right direction? Are they just acquiring new banks and trying to modernize and innovate? And yeah, where do you see the landscape going?
Look, I think the big bands, I mean, they've been around and they've been around for a long time, and there's a reason for that. Like what they do it really, really well. I think it just takes them a little bit longer to basically adapt to what the market is expecting. We see the likes of JP Morgan in the UK. I mean, their app looks fantastic. There's a lot of people actually using that particular app, and they're investing a lot of money in making sure that that app is quite modern. So I think the reality is, even though we are a fintech and we can try and be cool and we can try and be nimble, I think the reality is those big banks will catch up. It's just a matter of time. It's not a matter of if they will catch up, they definitely will. It's just a matter of time. And the table stakes right now is, having a very, very cool app, being able to manage your app, manage your accounts, managing your card, everything within the app without having to speak to someone. Or if you are going to speak to someone, have that customer service happen very rapidly. You're not waiting for hours. That's how the market is actually demanding banks and financial services to actually operate. And it's just a matter of time before those banks actually catch up.
Who would make sense as a next partner for Yonder?
From a merchant perspective,
Right.
um,
Like
I think
laser tag or an
potentially,
activity or
yeah, I think that's an interesting one. I think I love the concept of uh, travel and stays. So, to give you context, the concept, the word yonder just meant over there. So the idea of us calling the company Yonder was it allows people to envision a destination that they had to go to. It could be a destination, it could be where they want to be in 5 years, 10 years. I mean, you touched on, I earn £30,000 per year. It doesn't make sense for me to manage my money, but as I earn more money, I want to be in a better financial place. So that's the fundamental root of Yonder. So part of it is obviously helping their finances out and making sure they can manage their money and get rewards. But the other side is also destinations, travel, things like that. So one of the concepts that we have is we don't charge a foreign exchange fee when you go overseas and spend. So, we have a large proportion of our customers use our card overseas. So where I see the product going is, do we have rewards partners in overseas markets that allows people to go and redeem their experiences overseas?
Any plans of getting into buy now, pay later?
It is a concept that we have thought about, but ultimately, given our size, we want to stay unbelievably focused. But I think the reality is buy now, pay later is something that's going to be an important and kind of stable mechanism for people to borrow and pay for things. So just like a big bank not getting involved or not getting up to date with a cool app and being able to manage it in-house, I think buy now, pay later is going to be something that's going to be needed. So we will definitely get there. It's a
You
marathon.
guys raising a Series B this year?
Potentially. At the end of the day, like we as a fintech, we are always going to get funding. We need funding to run. So there is a likelihood that we'll be going out this year to look at additional funding.
You looking to be acquired by a big bank or start acquiring micro startups yourself and becoming a behemoth?
Ideally, we'd like to get an IPO. That would be the nice surprise. But ultimately, that's for me personally. The way I'm looking ahead is what's going to happen for us over the next year, and how can I make sure that we build the right product for our consumers, and then making sure that they stay engaged, stay loyal, and then we can grow this product out and our experiences out to attract new customers and grow a larger member base. I think everything else that comes off the back of that will be great, but ultimately, stay mission focused and make sure that we provide a great product that members can actually use, and they find super useful.
And what would be a wildly innovative idea to give your customers what they want? Because it seems that rewards point have been used for quite some time. Um, yeah, I can think of wild stuff myself, but buy now, pay later is certainly interesting. But yeah, I'll give you the stage. What ideas did you have on your side that could be incredibly useful for them, but wild?
That's an interesting one. I love the concept of being able to pay for anything with credit. You know, can you deconstruct the concept of a credit card? Can you deconstruct the concept of a product? Don't know. I mean, that could be a super wild idea. But I think the key importance is the product itself needs to be understandable. Buy now, pay later is a product that you can really understand. You're buying it now, paying for it later. So I think the key thing for us is whatever wild idea we come up with, the market needs to be able to understand it. And that's the key thing. But what we do is internally is we speak to customers all the time. I think the key point is understanding their pain points. So the rewards proposition that we have at the moment is actually built off some of their pain points. And the pain point is they feel like they can't redeem their points. They feel like they're holding points because they're kind of forced to. So our experience redemption, and doing it on things that they can redeem on every day, every week, every month, was actually born off the back of that.
I have something wild. So let's say
Tell me.
that I'm a graphic designer and I go buy bread every day at that place. There would be an API that would tell me that this bread place needs more clients, need an influencer, or need a graphic design. So I would trade hours of my own services against the bread there, or just give them a bunch of shout outs to give them more customers. And the little card would take track of all of that. What do you think?
So basically trading your time for products. So you're not trading
Right, or
money.
value.
Yeah, I mean it is a wild idea. Yeah, I have to think about that and see how it fits within a car proposition and be able to track actually track that data. I feel like there's a lot of moving parts in that particular concept. You need your bakery, you need yourself, and all that data sharing needs to be done on a singular platform. So it would be a completely different business model. But yeah, definitely a wild idea. I think the key thing that you're picking up on there is like the concept of linking two individual parties and building that relationship through a fundamental, like a central process. And could we be that central process? But yeah, definitely, like that's something that we could consider. How can you connect our members to the merchant and maintain and foster that relationship?
Right, because there's two startups in there. I think that the most exciting one would be like the influencer marketing one. Like, okay, you pay there, but you need like to post on your Insta and you get like a 30% discount. That'd be potentially fun. But yeah, wild idea and quite incredibly hard implementation. Where can people find out more about you, Tesso?
Yes, I mean, you can find out about us on yonder.com, about the product. Right now we're offering 10,000 points, 1 month free on the paid proposition. If you don't want the paid proposition right now, there's obviously the free proposition for you to try. And then you can upgrade from that free proposition to the paid proposition and your card number won't change. So it's not like you're signing a new contract. So a single contract for two products. If you want to find out about me, I'm on LinkedIn with the name Tesso Jivajirajah as my handle.